There's a lot of movement in the crypto prices this week, and today alone the market cap is down 2.6% in the last 24 hours. We can see over the last 7 days that Bitcoin is down almost 10%, 9.4%. But let's see who's the biggest gainers and the biggest losers this week. Well, first of all, we've got Bitgate token, and that's up 17.2%. We also have Kava, that's up 15%, and we've Bitcoin SV, that's up 9.6%. The rest of the increases are barely worth talking about. Now, the largest gainers this week, we can see Pepe is down 40%, and I'm really not surprised to see that. And maybe this is the end of the run with the meme coins. Conflux is down 22%, Optimism is down 21%, Injective is down 24%. So why are all the tokens taking such a dip this week, including Bitcoin? Well, if you stay tuned right till the very end of the video, I'm going to explain all of this in a lot more detail, because there's some interesting news on large market makers actually leaving the market. Now, it has also been a very volatile week this week. We had the inflation numbers, and the inflation numbers often cause a little bit of volatility in the market. But why is the market down so much? Because it's not just due to inflation figures. We'll make sure that you stay tuned all the way till the end of the video, and I'm going to go through that in a lot more detail. But first, let's look at the market cap of the BRC20 tokens. And I'm just going to refresh this here for a minute. And we can see the 7-day change on some of these tokens here. So RD is priced at 822. That was listed on gate.io this week. Pepe is 35 cents. And we can see that some of these have had some reasonable gains this week. But if you look at them in the last 24 hours, they're actually down quite a bit in the last 24 hours alone, and reflective of the entire market being down. Now, like I said, I will talk about that later on in this video, so do stay tuned until the end. Now, sticking with BRC20 tokens before we move on to the rest of the news for the week. If you are looking to get involved in BRC20 tokens, and it is a little bit complex at the moment, Alex Labs, so Alex, built on top of Stacks, these are going to be building a BRC20 exchange on top of Stacks, which uses Bitcoin for finality. So soon, if you have a Stacks wallet, you'll be able to engage with an awful lot more ease than it is at the moment with the BRC20 tokens. Now, if you want to prepare yourself for this, this is happening next week, people. It's going to be happening, I think, on Wednesday. And I will do a video, a more detailed video about Alex at a later stage. If you'd be interested in that, don't forget to subscribe to this channel so you don't miss out. But one of the wallets that you can use for this is the Hyro wallet. And in the Hyro wallet, if you go into Receive, you can see that these are set up for Bitcoin. They're set up for Stacks, but they're also set up specifically to be able to accept ordinal inscriptions and Bitcoin stamps as well. So to prepare yourself, if you want to get involved in the BRC20 trading on Alex, then make sure you get yourself a Hyro wallet, load it up with a little bit of Bitcoin and a little bit of Stacks. You'll have to buy your Stacks on a central exchange, like maybe Binance or something like that. And then you can send it over, or you can buy Bitcoin, send it over, and use the Alex swap to swap it to Stacks. Now, just sticking with BRC20 tokens at the moment as well, we see that Binance is entering into the marketplace for this and is going to add support for Bitcoin NFTs. Now, these are Bitcoin ordinal, so I'm unsure at the moment if they're going to be entering into the BRC20 market. I know that gate.io have entered, but it doesn't actually say in this article that these are going to be doing BRC20 tokens. So basically it says the leading cryptocurrency exchange will allow NFT collectors purchase tokens on the Bitcoin network directly through their Binance accounts, bypassing the need to create a separate wallet for inscription. So it does specifically say that these are inscriptions, and there's no mention of BRC20 tokens. Leading cryptocurrency exchange Binance Non-Fungible Token Marketplace said on Tuesday it's planning to add support for ordinals or Bitcoin NFTs later in May, though an exact date was not announced. Binance NFTs have already support NFTs on Ethereum, Polygon and its native BNB chain, and it plans to expand its offering by allowing traders purchase ordinals on the Bitcoin network. So collectors can soon buy and sell inscriptions or NFTs created on the Bitcoin network, expanding the reach of the ordinal ecosystem. And that should take a lot of pressure off Bitcoin and the transactions going through on Bitcoin. Although if you've seen my video earlier this week, you'll know that Binance had to halt transactions of Bitcoin, withdrawals of Bitcoin, because of congestion on the Bitcoin blockchain due to BRC20 tokens and ordinals. So let's move on to a little bit more news that's out this week. So Robinhood crypto revenue is down 30% year over year in Q1. Now we reported on Coinbase last week, and Coinbase is a listed company. So it's interesting to also see what's going on with Robinhood. So online trading platform Robinhood reported cryptocurrency revenue of 38 million for Q1 in 23. This is a decline of 30% compared to 54 million for the year earlier. On a quarterly basis, however, crypto declined just 1%. The 38 million crypto trading revenue figures in Q1 compares to the 441 million trading volume across all of HUD's business, a rise of 47.5% year on year. Now, here's where things really do get interesting. The crypto company also reported holding 11.5 billion worth of crypto in assets, up 36% from the fourth quarter. Now, this reflects the rebound in the cryptocurrency markets in the early part of 2023. And it'll be interesting to see in the second quarter and going into the third quarter, as the market cools off from the first quarter, how all these sort of figures bear out. The next thing I want to share with you is a chart, and this is charting the number of failed cryptocurrency coins by year. Now, this first chart I've actually opened up a little bit bigger on another page so we can see it properly. So from January to December, the value of Bitcoin rose 15,000%. The largest one-year increase in history. As Bitcoin gained value and legitimacy, trading volumes increased and hundreds of new crypto coins were issued. In 2018, 751 crypto coins became defunct, the most casualties in any 1 year. Of those, 390 failed due to lack of trade volume, and check this out, 237 were actually down to fraud. Blue being scams, yellow being jokes, ICO or failed or abandoned, and no volume. And if we scroll down to the bottom of the years here, we can see that 2018 had that 751 tokens that became defunct in the year. Now we can see that joke or no purpose, which is kind of meme coins. It'll be interesting to see this chart in 2023 after the meme coin rally that we did have this year. We can also see the purple, the ICO or failed coins here in the purple. And we can see the largest ICO failed coins was there in 2018. And then we've got the abandoned or no volume. Now, if we scroll down a little bit further in this article, there is another interesting chart here. And this is that the year that the token starts, the older the token is, the more likely it is to actually fail. So while nothing lasts forever, crypto coins tend to have a especially short lifetime, with an average lifetime of just 15 months. Older crypto coins are more likely to go defunct than newer ones, according to data. 2014 has the highest mortality rate for new coins. Of the 793 coins released that year, 76.5% are defunct. So we can see here, based on the year that the token was, or the coin was released, how many of them are now totally defunct. So older coins like Litecoin and Dogecoin that are still about, these have a higher likelihood of failing as the technology improves, as there's more innovation in the space, and these older chains that don't do as much kind of start to lose a little bit of value. So we can see in 2017, 50%, 57% of the tokens launched that year have failed, 27% of the tokens in 2018, whereby 2022, only 0.06 of the tokens that started in 2016 have actually stopped trading now. So moving on to this next piece of news, and this next piece of news is from Tether, and it's an independent auditor's report on the consolidated reserves. Now, this isn't an audit statement, it's just a report on the reserves. And it's quite interesting to see, if we scroll down into this a little bit more, it goes through all of the accounting standards. But what it says here is that the management of the company assets as of the 31st of March 2023. So its consolidated total assets amount to 8 billion, over 8 billion, where its liabilities are 7 billion, of which a large portion of this relates to digital asset tokens issued. Now, this report has been prepared in accordance with international financial reporting standards. And like I said, it is not an audit report. It is just a statement of their actual reserves. And you can see a breakdown in how they're carrying the reserves. So if they got treasury bills, overnight reserve purchases, term reserve purchases, money market funds, cash on deposit. We can also see they have quite a lot of precious metals, most of which are gold. And then we have 1 billion worth of Bitcoin. We also have investments and secured loans. And that's what makes up the 81 that we can see. So that is Tether Holdings. Now we've got more news as well, and it's a little bit of news about what's going on in the States. And last week we reported on Coinbase, and Coinbase looking for clarification and issuing this memorandum to the courts to try and get clarification from the SEC. So what's happened now is a couple of different groups, and two groups in particular, have actually filed petitions that try and help Coinbase. And the things that they filed are amicus briefs. So what are these? Well, basically it means that they are not part of the case, but the ruling or the outcome of the case can have a serious impact on them and on the business that they do. And they have a keen interest in the results of how this case works. So basically they have written into the courts with a petition, and they've given their reasons why they believe that things should go in Coinbase's favor. So the Crypto Council for Innovation is one of these people that's filed this amicus brief. And what they've basically said is that all the toing and froing and going back and getting no decision deprives market participants of fair notice as to what's permissible, and it chills innovation and investment in digital assets. Unless companies can rely on clear, concise guidance and work within a regulatory framework that makes compliance possible, digital assets will not achieve their full potential in the US. The tweet then goes on to say failure to provide a clear path opens the door for bad actors and incorrectly paints the industry one broad brushstroke. It also undermines the SEC's mission to protect investors, maintain fair, orderly and effective markets, and facilitate capital information. Far from protecting investors, it exposes them to increased risk by pushing good and responsible actors out of the market, creating a vacuum to be filled for those least concerned with its compliance. As a result, the US risks losing influence over defining standards, not to mention national security implications, if the next wave of global financial infrastructure evolves outside the US borders. So people are organizations are really concerned about this. Now, we can see as well that the US Chamber of Commerce also filed in this case. And this time, they've actually said what the SEC are doing is unlawful in the digital asset space. And I'll link to these tweets down in the comments below, so you can access and read these tweets if you want to. But basically, the US Chamber of Commerce have come out and said, look, what the SEC are doing is not only wrong, but it's actually unlawful. Now, I did say that if you hung on to the end of the video, I'd explain to you why the crypto market is taking such a big dip at the moment. And it seems like there are some market makers that are starting to move out of crypto market. And before I share that story with you, if you've been finding this video of value, please do smash that like button. And don't forget to subscribe to my channel so you don't miss any more of my videos. So who is it that's actually been leaving the market? Who are these market makers? Well, the heading on this says Bitcoin liquidity on the brink as Jane Street and Jump exit the crypto markets. So there's been an abrupt exit of Jane Street and Jump trading, two influential crypto market makers that has the potential to disrupt the fragile flow of liquidity across the industry. Jane Street and Jump will stop their crypto trading activities in the US following a regulatory clampdown that spawned out of the FTX collapse in November. Jump's crypto division is going to continue to expand globally, while Jane Street will scale back on its growth plans. The news is not necessarily surprising given recent developments. What's concerning is that liquidity has still not recovered from Alameda's collapse, and the slowdown with the two of the biggest surviving market makers could weigh on liquidity even further. Now, what the author is surprised with is that it's a bit surprising on how slow the industry has been to fill the gap. So we have a market liquidity graph here showing the drop in liquidity in Tether, the drop in liquidity in FTX. The crypto native market makers, unlike traditional firms such as Jane Street and Jump, aren't put off by the exodus because they believe it's constrained to the US markets. Now, I don't fully agree with this because as we can see from the prices this week and the sell-off that these are doing, it's impacting the entire market. It says here, not a big impact yet, but we can see it today. In the short term, some exchanges will be less liquid, but what's more important is that it's going to be more difficult for US counterparties to source over-the-counter liquidity. The United States' gung-ho stance on crypto regulation has already attracted criticism from the likes of Coinbase's CEO, but the long-lasting effects are possibly far greater than any short-term trembles. And this really ties into the petitions that have been filed by the Crypto Council and stuff during the week in line with Coinbase's claims about the SEC not coming back to them in time and how this really impacting the market in America and companies leaving the market in America. An absence of liquidity, which is what crypto industry will experience as several market makers jump ship, cause an increase in how volatile the market is as it takes less capital to move an asset. This, coupled with highly leveraged nature of the crypto market, has the potential to create a credit risk that could spread across all sectors of finance. Now, I did say before that it's traditional in markets to walk away at the start of May and come back in the 1st of October. And this could very much, or the 1st of November, and this could very much be the case with crypto this year. We've seen 4 really good months in crypto, and I think we're going to definitely see a cool off. Now, whether we see all-time lows or not, I'm not sure, but I know we'll definitely trade down probably to at least 20,000, and we could trade in a range for the remainder of this year and probably not see a real good uptick until November and December, which is coming into the halving that's happening sometime around April of next year. Now, if you enjoyed the content of this video and you want to stay up to date with all of the news and what's going on in the crypto market, I do release these updates every Friday. So do subscribe to my channel and hit that like button on this video so more people can find it.